Hello everyone, it's Mark Barrett here from Property Tax Advice. A longish video, I apologise, but it is important that you do watch the video, please. This video is all about ATED, the Annual Tax on Enveloped Dwellings. In all probability, you've never even heard of it, but it is a tax where if you're using a property within a company, and I'll be explaining all of this in the course of the video, you could end up having to pay a tax. In all probability, you will not have to pay the tax. So why am I talking about it? This is an unusual tax. Normally we have to tell the tax man about what we've done in the prior year. The ATED is all about the future year, what's coming, and you have to proactively tell them. They don't remind you. What that means is if you don't proactively tell them, and we're publishing this video in March deliberately because you've got to start telling them as of the 1st of April. If you haven't told them by the 30th of April that you don't owe any tax, you get a penalty. So this is not about managing a tax bill, it's managing a penalty. So it will be a PowerPoint presentation. I'll be talking over it. That's fine. You don't need to look at my not so pretty face. It's the detail you want. So let's just crack on and we'll just talk you through the ATED tax. So the first part, I'm just going to quickly introduce ourselves. We are property accountants. We're now probably the largest specialist property accountants, and this is all about ATED. The next slide's important, and then you won't be seeing my face on screen anymore. You'll be going back to the presentation, and we'll get into the details. So the next one is important, which is the wealth warning. This is not professional advice. You must not take action or refrain from taking action based on the information I provide. So, introduction to the topic, you must take advice on your precise circumstances, either from your accountant if he's up to any decent caliber, or else please come and talk to us. Okay. So what I'm going to do now, we'll move over to the slides themselves and we will crack on. So ATED, it's missed by companies. And as I've already said, you are not being prompted to make a return. You're expected to know the rules and present your information to HMRC. And just simply say, no, not for me, thanks. Don't want to pay in it. That's fine. Is where a property is valued at more than £500,000. I know I definitely used the word property just then. I'm explaining it. Please stay with the video a bit longer. You really do need to hear this. And if a property is over £500,000 and owned by a company or other non-natural person, that's the rules, such as partnership, and you have to pay a tax if that property is used inside the company. Most property investors, most developers, you don't have to pay the tax, and we'll be explaining what you have to do to avoid the tax. But what we've got to do is make the return, otherwise you face the penalties. The penalties are real, okay? The way the legislation's written, courts can't say, oh, well, that's not fair, we won't charge you for that. If the penalty is existent, it's in legislation, it can't be negotiated. It's led to many being fined, and you can see that I've just put something on the screen now about Hughes Property Partners 2023. It's fairly recent, and they dismissed the appeal. You can't appeal against this, against the penalties. You have to get it right, otherwise you pay the penalty. Really important now, what is a dwelling? So you remember this is called the Annual Tax on Enveloped Dwellings. Okay. The dwelling must be valued at over £500,000, and we'll be talking about that. And if it's used inside the company but not in a commercial manner, then annual tax is applicable, but you've got to deal with it. So let's imagine you've got a block of flats. You've got building a property costing £1 million. It's got 4 flats in it. Each flat is capable of being defined as a dwelling. If you don't know the distinction between dwelling and property, well, you really ought to, because you've got the stamp duty, which is the stamp duty is payable on dwellings, okay? Dwellings. Basically, it means that it's capable of being self-contained. It's got a bedroom. It's got a seating area. It doesn't need to be a sitting room. A seating area. It needs a kitchen. This is not a baby belling on a shelf. It's a kitchenette, kitchen, and a bathroom. And you can lock the door, and you're not dependent on anyone else for entry to or being disturbed by anyone else once you've gone into your dwelling. So this is £1 million property. It's got 4 dwellings in it. Each dwelling is only worth 250. You're outside of ATED. That's great news. Let's imagine you bought an HMO. It's a property with, say, 5 rooms in it. It's probably quite an expensive HMO. Let's assume it's in a really nice area. Because it's an HMO, you have to leave your bedroom area to go to the seating area, or go to the kitchen, or maybe even to use the bathroom. Therefore, your area is not a dwelling. The whole building is the dwelling. ATED does apply. Okay, so dwelling's important. If you've established that you have a dwelling that's over £500,000 and requires an ATED return, you've got to file it. Just about to tell you now about the deadlines for this. The important part, I should have said in the last slide, is that HMRC will not be chasing you. You have an obligation to go to them and say, I've got a dwelling. Normally when you buy the property and if it's worth more than £500,000, because you're talking about the period in advance, we're talking, when this is not like normal tax, okay? We're saying, I've got a property for the year coming. I've got a property. It's worth over £500,000. You have to do an ATED return within 30 days of buying the property. Now, would it be nice if the solicitors told you this? Yes, but remember the solicitors have already, in their documentation and their contract with you, said they're not tax advisors. So if you're in the business of property and you buy property that's over £500,000 and that is defined as a dwelling, you've got 30 days from when you buy it to file your ATED notice, okay? For a new built property, when you're building it, it's not capable of being lived in. So you have to submit an ATED return if you're a builder within 90 days as soon as it comes into existence for council tax or the first day it's occupied. Okay, so as you're building it, fine, within 90 days of getting your council tax demand or getting the first occupation, whichever's the sooner, you've got to file your ATED return. But you have to register with HMRC to allow you to file an ATED return. Hence, talking to you in March. If this applies to you, goodness sake, please, guys, get your registration sorted out because you've only got 30 days to make this declaration as soon as the period opens on the 1st of April. The return. You've got to submit a return once a year. You can only submit it after the 1st of, on or after the 1st of April. You've got to submit it within 30 days. Therefore, you are submitting, as I've said twice already now, you're submitting for the upcoming year. Normally, we're used to, all businesses, we're used to saying, well, what corporation tax did I have to pay for last year? What annual income tax do I have to pay for my income from last year? Everything's backwards looking. This one is forward looking. Okay, so it's completely different. So, frightening you all so far, let me tell you how you don't have to pay tax, okay? Let's crack on and let's try to avoid these penalties. There are reliefs you can claim from ATED, okay? I want to explain now quickly why ATED was brought in. This was brought in for properties, originally it was properties in excess of £10 million, or sorry, dwellings worth over £10 million. And it was to stop the oligarchs and the Russian oligarchs, the sheikhs and whatever, the super rich, coming into Mayfair. Their companies are buying a property, they live in the property. Therefore, the person's getting a benefit in kind because they're living in the property. And the government said, well, we'll create this new tax, ATED. Then they changed the limit from 10 million down, down, down. Now it's £500,000. It's catching a lot of people, a lot of penalties. But if you are commercially renting out a property, a dwelling, then you don't have to pay ATED. So your company owns the property. It's £500,000. It's HMO. But you're renting it out to people. You're commercially using it. You don't have to pay ATED. If you've got property and you're buying property and selling property, that's fine. You don't have to pay ATED. But if you don't tell them, that's where the problem comes in. We've got clients who do have houses, dwellings, which are worth more than £500,000. They use it not for the owner to sleep in and not for the family to sleep in, for example, but they've actually used it for some storage. Okay, well, the company's now using it for its purposes, not for commercial purposes of renting it out. So you still have to pay the tax. Okay. You mustn't let it to the family. Just because you're the director, if you let your child stay in the property, it can't be connected to you. So you have to submit an ATED return for every property where you have to pay the tax. Okay. But if you've got 20 properties, all of which are more than £500,000, well, first of all, congratulations. You've done very well with your investments, and I applaud you. You just list all 10 on the one document that said, no, I've commercially let all these properties. I don't have to pay it. You can do one ATED return per relief type. So you've got 2 relief types there. You might end up having to do 2 returns. Okay. If you cannot claim the reliefs, then you're at the situation where ATED is payable. You've got a property, it's worth more than £500,000. You've put your mum in, whatever. The tax starts at £4,000. Yeah, subject to the size of the property, it's banded. The highest number was £270,000 tax per annum. Okay, so my big message is don't use the property. If your company owns the property, don't use it for yourself. Don't pay the annual tax on envelope dwellings. Okay, it's expensive. So how do you value the property? Okay, if the dwelling's over £500,000, you need to keep an eye on the valuation. The property hopefully is increasing in value. So how often do you need to revalue the property? Well, it's every 5 years. This rule came in 2012. That means every 5 years from there. So right now, I'm recording this video in 2026. We're looking at the valuation as of April 22. What was the property valued at in April 22? If it was valued at £450,000, great, you're outside of ATED. Even if the property, you've had a boom in your area and the property's now worth over £500,000, it's fine. You're valuing at the 1st of April 27. What it does mean, therefore, keep an eye on it, because the next 5-year anniversary, the valuation at April 27, now you have to value the property. Okay, and you'll be into ATED. If you're in a company, hopefully you've got a decent accountant. They are talking to you about the FRS 102 revaluation. Every year, your accountant says, I know you bought the property for whatever price. How much is it worth now? What is your unrealized gain? Unrealized gain. So you are publishing, if you've got a decent accountant, you publish your accounts in accordance with the rules and the regulations that apply for financial regulation standards. You are already telling the world how much your properties are worth. Don't try to hide. All you got to do is submit a return that says, no, I'm commercially letting the property. But if you've got a property that's worth more than £500,000, it's going to be in your accounts anyway under FRS 102. Does it seem like these two are connected, that you've got these 2 sets of rules? Maybe. If you purchased a property after April 22, in this example, when it's your revaluation date, it's the purchase price of the property, okay, of the date of you acquired it. Then you get to the next anniversary date, then you value it again. And now you make a decision, are you in or out of ATED? Okay with that? What are the penalties? Now remember, this whole presentation is, as a company, we look after a lot of property clients. How many of our property clients are actually paying ATED tax? Not many. Really, truly. Two hands, fingers of two hands. Okay. How many people have to do returns? A lot. Why are you doing the returns? To avoid the penalty. So let's talk about the penalties. So first of all, if you do owe tax, you do owe the ATED, and you don't tell them, then you've got a penalty for not paying, and you've got a penalty for not telling them that you should have paid. So you could have double jeopardy there. If you don't have to pay the tax, but you didn't tell the tax office you didn't have to pay the tax, the penalty is £100 if it's late by 1 day. Okay, well, we're quite used to that penalty, aren't we? So Income Tax Corporation, that looks like normal. Daily penalties for 90 days at £10 per day if you're late by 3 months. Okay, so we had 100, now we've got another £900. That's a £1,000 penalty so far. And you're only late by 3 months. Another penalty of £300 if you're late by 6 months. So there's your £1,300 that I was talking about. But the issue, of course, is that the next penalty comes in. Actually, it's a year and a day, isn't it? Which is why I sometimes say 1,300, sometimes I say 1,600. Yeah, you've got another £300 penalty for not submitting a piece of paper that says, hey, taxman, I don't owe you any tax. That's all. That's all you've got to do. If you don't do it, you're going to end up with this penalty. £1,300 inside of a year, £1,600 on a year and a day. Okay. There was a recent court case, the Hawthorne Properties case. The judge did actually limit the penalties. Okay. Don't depend on it. Right? He limited it to, I think it was about 900 quid. Only £900. And he had to go to tribunal and pay this accountant and solicitor to represent him. So his expenses were high. Okay. Just get the damn paperwork done. This is only an introduction to the topic. I wanted to reassure you that you probably don't have to pay the ATED tax, but you might need to make a filing. So what we've said to our clients, we've got 3 options. Fairly complicated. This is literally the narrative we sent to our clients. Do you want assistance with ATED? If you do, message us. If you don't know what you're doing, your accountant hasn't told you about it, your solicitor hasn't told you about it, you're a bit worried now, contact us. You can see my email address, phone number, website, all quoted at the bottom of this slide. Okay, good. You've got it under control. Excellent. You're dealing with it yourself. Great. Not worrying whether you come to us or not for this. If you're dealing with it, crack on. Just get it right. Well, if you don't have any properties over £500,000 on the latest valuation, either the purchase price or the valuation April 22 for this video in March 26. Cool. Doesn't apply to you. Well done. Okay. I've rattled through this quite fast. You might need to look at it again. The slides are there. I hope they're helpful. If you need assistance, come to us. We've got a lovely lady called Jenny who is supremo on this. She's really good. She will look after you, but come to your accountant, come to your consultant, come to me. I don't mind. Just email me. Tell me that you need some help. I'll connect you to Jenny. I don't want to deal with this myself. She's actually better at it than me. I just don't like to say that too loud. Let Jenny help you. Okay. Hopefully this video has been useful. One thing I'm going to just say. This is a slide that we normally put up on presentations, but it's relevant to this as well. If you've stayed this long, if you've got any questions that you want answering, drop us an email, put a comment after this video, anything. Just ask us your question. And we'll probably do a video about it to try to give that information to as many people as we can. I hope this has been useful to you. And you're welcome to contact me anytime you want to. Okay. Thank you very much. Again, Mark Barrett here. I hope this has been useful. Take care now. Bye-bye.